Hope everyone's doing well and had a good day. In this video, I'll do a brief recap of the Emini 5-minute chart for Monday, May 12th, 2025. And going into the day, there was a big gap up. It was about 3% up going into the day. And when there is a big gap, there's an increased chance of a trend day in either direction, which is good to know going into the day for day structure. And it's also good to take a look at the Globex chart and see what's going on leading into the open of the day for the RTH, the regular trading hours. So going into the day, if we're just looking at this RTH chart, we have a big gap up going into the day. And it looks like the market rejected the gap rather than accepting the gap. We gapped up, but right away on the open, we sold off many points. And there was this big bear trend bar. So right away on the open, we know there are trapped traders at the open. Traders who bought on the open immediately trapped into a losing trade. If a bear did sell, well, first of all, if a trader did not sell and they wish they had sold, they're trapped out. They're trapped out of a winning trade. And the bears who did sell, well, maybe they didn't have a lot of information at the time. We get more information with every bar. So at the time, maybe the trade was average probability, maybe 50-50 at best. Until we get the bear breakout, then probability increases for the bears. So even the bears who took the sell maybe didn't take as big of a position size as they want to because of the average probability. And all three types of those traders, all three categories of the trapped traders are looking to sell. Bulls who bought high, looking for a pullback to exit with a smaller loss or maybe at break even. Bears who did not sell, looking to enter short on a pullback. And then the bears who did sell, but maybe didn't take the position size that is appropriate for their account. Maybe they traded small. Now that there's better probability for the bears, they're looking to sell a pullback as well and get their risk up to the appropriate size for their account. So after this bear breakout on the open, we have trapped traders above, resistance above, and traders are looking to sell, probably going to get a second leg down. Now, we have a reversal attempt here on bar 5. I'm sorry about the bar numbers. I don't have bar numbers, but you can see my pointer. We have a reversal and follow through for the bulls. It's a decent trend line break. If you imagine a trend line for the bears, steep bear trend. Trend line break, disappointing for the traders down here because now this reversal and follow through by the bulls traps traders below. Because of that, there's support below the market. The bears who sold anywhere, maybe if they didn't take profits down here, now they're sitting through a pullback. And the bulls who didn't buy, maybe they missed. I can't tell exactly if this bar got 1R, if we went for a measured move up of bar 4. But it looks like we came close, or we either got it or it came close. And it's enough of a breakout that there's trapped traders below, disappointed traders below. Like I said, bears who sold anywhere, even if you sold up here, you then sat through this fairly deep pullback. This pullback's about 50% of the sell-off. And what are you going to do if you're a bear and you get this move counter to your direction and the market comes back down and tests down here? You're probably going to buy if you're a bear. And if you're a bull, you see this reversal, and you're thinking at this point it's probably either a trading range or maybe a major trend reversal, because you can get major trend reversals with fewer bars than you normally would when it's the open of the day. So the bulls might be hoping with a bear trend line break, retest, and then a higher low major trend reversal. But The buying pressure here, big tail on this bar. Yes, it's a decent trendline break, but the problem is we still have a lower high and sellers into the close of this bar. Not as strong as it could be for the bulls. Now, bar 5 is a low 1 sell signal. Bear breakout, pullback, trend resumption, that's a low 1 below this bar. There are problems with it. It's a bull bar, it's a bad sell signal bar. It's also in the middle of a tight trading range, and you have trapped traders below. So the problem with selling here is you'd be selling right where traders are looking to buy. Bulls and bears trapped on the reversal and follow through, looking to buy the pullback. So to me, this bar, this bear trend bar, is a pullback of the pullback. I see this as the major breakout. This is the pullback, and this is a pullback of the pullback. The pullback was strong enough to disappoint traders, trap traders down here, and that creates temporary support. So on a trend resumption attempt, we might find support and a second leg up for the bulls, but I still think this is all minor. Look at the bear breakout. Probably 80% of this bear bar is overlapping with the prior bar. Overlap, confusion, it's the hallmark of a trading range. So it's a bad low 1, probably buyers down here, but also probably sellers in the sell zone of this bear bar. Bulls don't have much to buy up to this point, and then here we have a micro double bottom. We went down, up, sellers into the close of this bar, so the tail, again, not ideal for the bulls, and you can see we found sellers in the sell zone of the bear trend bar. At this point, we have lower highs, higher lows. The range is compressing, so we had expansion on the open, and now it's contracting. So we're getting squeezed into a triangle. With triangles, the breakout direction is close to 50-50, and there's a 50% chance that the first breakout fails and we reverse and go the other way. So if you imagine a bear trend line, a bull trend line. This is a triangle. We got a bull breakout, but what's the context? It's breaking out of a triangle, but what's the bigger picture? Bigger bear breakout on the open. Some traders might see 1, 2, 3 attempts up, or if you don't count this as an attempt at a reversal, and you count spike breaks, here's one spike break, resumption, and second spike break. And in the second leg for the bulls, the second leg up, 1, 2. The second leg subdivided into 2 pushes, 1, pause, 2. So we're testing a bull channel line. We have a late leg, it's leg 2 or leg 3. If it's leg 2, it's nested. Again, 1, 2, 1, 2. And again, it's still a lower high after this bear breakout. Is this a major trend reversal? To me, it looks like a trading range. Lots of overlapping bars. This is a pretty good bull breakout bar, but it's not even breaking out of this pivot point, this lower high. And this lower high is not a major lower high. This swing point did not result in a strong bear breakout to a new low. So even if we get above this high, it still might be always in short. So the bulls get a good looking bar, but the context not very good. And the bulls really need follow through here, because if they don't get follow through, we might be looking at a late leg, high in a trading range, or late in a channel. The bulls looking for a breakout, they need momentum. There's no breakout until there's a breakout, and they don't get it. Disappointing bar on this bear reversal bar. Still always in short. And if a trader bought for any reason, let's think about the bear perspective. If you're short for any reason, reasonable to exit above the micro double bottom. Also okay to hold. Also reasonable to exit above this bull bar. But if you exit anywhere for any reason and you're trading always in near a bear, you sell again below a bear bar closing near its low. So right here. Without this bar, not ideal, It's not really closing on its low, and it's at the bottom of a trading range. But here, this is following 3 legs up. We're testing resistance for the second time. You can call it a wedge. You can call it a double top. Here's one reversal down, second reversal down. It doesn't really matter what you call it. What's important is that you know this is the dominant feature of the day. This is a trading range. So we have a breakout, trading range, probably bear flag, and the odds favor a second leg down. Is this the second leg down for the bears? Probably not. This is not a symmetrical second leg. This is a very small second leg. The bears did the minimum here, but until there's a major reversal with big consecutive bull bars and a significant trendline break, I'm assuming this is a minor reversal and a bear flag. So there's a trend resumption short for stop orders, bear flag here, below this bar, below this bar. And we got the give up bar here. So bulls who bought for any reason, they get this bar against them, they get the entry bar. And if a bull bought the close of this bar, they were not able to exit at break even. And now the risk is that the bears get a second leg down, or even at a minimum, this is a trading range. We've tried to break out to the upside several times. Now we might test the lows. And the odds favor market testing down here. Leg 1, complex pullback, leg 2. So a give up bar here, traders, bulls bailing out of trades, stepping aside, looking to buy lower. Bears pressing positions, holding on to shorts, looking to take profits lower, probably support down here. You can see leg 1, leg 2 measured move, almost exactly where the market reversed up. Bull reversal and follow through at a measured move target. Strong reversal bar, even stronger follow through bar. Really good for the bulls after 2 legs down and a gap up. This is a big high 2. There's a high 1 here on a higher time frame. This is the high 1, and this is the high 2. And you can see this is a bad buy signal bar. We triggered the buy, and if a trader sold above this bar, they got trapped on the bull breakout. That creates support below the market. And then here, it's big down, big up. We go and test resistance in an area where traders were trapped here. Remember the bulls, if they bought here, they're trapped. And what are they going to do on a retest? If they get the opportunity to sell at the price they bought up here, they obviously realize they made a mistake. Man, I shouldn't have bought up here. Obviously, I was wrong, and I should look to buy lower. But if they bought here, used a wide stop, scaled in, they're probably looking to exit near break even, either on the entire trade or at their original entry price. I'm not sure if we quite got there, but we came close to it, and we can see the reaction. Leg 1 reset for the bears. Big down, big up, big down. Trader saw a pullback, and we get a channel. I have to, unfortunately, speed it up here. I spent a lot of time talking about the open. So bear, spike, and channel. And if we count spike breaks, this is all 1 leg down. It's a micro channel down here. Pullback, leg 2. Looks like this is a lower high. And then pull back, leg 3 down. Or you can call it leg 1, pause, leg 2, leg 3, leg 4. Maybe even call it leg 5. What's important is that you recognize this is a late leg at support, so you can call it a wedge. Double bottom, the bulls see a higher low major trend reversal. And what's important here is if you are short for any reason, it's important to probably look to exit shorts above this bull reversal bar or this bull breakout bar. And bulls can certainly buy above this bar for a swing. If we think about day structure at this point, the odds decrease that we're going to have a trend day. Well, let me back up. I said it's likely increased chance we get a trend day after a big gap, but after this big bear bar, you're thinking, okay, maybe we get the bear trend day, but then we get all this two-sided trading, big down, big up. This is all the trading range. To me, it's probably a trading range day. This is not what trend days look like. And Thinking about the big picture and what's happening here, wedge double bottom, higher low major trend reversal. You can also call this a truncated wedge. We have push down, a second attempt, and a third attempt that does not get beyond the second attempt. So you can call it a truncated wedge, head and shoulders bottom, left shoulder, head, right shoulder. But because it's coming off a gap up, I think of this as a trend resumption setup, so a failed bear reversal. Lots of trading range price action here. Bar 1 is the high of the day. Just a bonus stat that bar 1 remains the high of the day only about 20% of the time in general. If it's going to happen, it's on, again, if we're talking about it being the high of the day, it's on bear trend days and bear trading range days. But in this case, with the big gap up of this trading range behavior, it's possible we get the bear breakout and then a lower trading range after this. But because of the buy signal here, and the bears don't look all that strong, we have a sell climax, sideways, sell climax, strong reversal, weak channel, bear channel, bull flag, and again, higher low major trend reversal. And not much resistance on the way up here. So the reversal is strong. This is a strong bull trend at this point. And it's minor. It's obviously at this point 4, 5, 6 bars. But I want to talk about that briefly because it's something I realized recently. When I first read Al's books, you remember he talks about strong trends that are so strong you buy for any reason. And he jokingly says things like, did it rain in the Amazon last year? Then buy. Did someone on your kid's high school basketball team score a point, last season? Then buy. It's just buy for any reason. It's strong context. And it's just get into the market, plug your nose and dive in because the context is really good. And I thought this was one of those times where the context is good. We have a bottom forming. We tried to sell off here, sideways, tried again, reversal up, and then this really weak for the bears. Lots of overlap, not clearly forming open gaps. And what the bulls have again is a wedge double bottom at support, higher low major trend reversal. So once you get this reversal, follow through, these are really small pullbacks. And on a smaller time frame, it's a small pullback trend. And on this time frame, it's a breakout. We're not getting pullbacks below bar. And these are really minor reversals. A little climactic here. We pull back, and pulling back, after a climactic bar, you expect 1 to 3 bars sideways. And depending on the context, you can then get trend resumption or trend reversal. But here, it's a minor reversal. First bear bar after a 5 bar bull micro channel in good context. The first reversal attempt is probably minor, so this is probably a high probability buy. You can buy the close of a bear bar, buy below it, betting that the first time the bears try to do anything, they'll fail. And the bulls get strong trend resumption. So what I was saying, I didn't finish my thought there. I used to imagine when Al would say strong trend, buy for any reason, those strong trends that you buy for any reason, I would imagine a chart that starts in the bottom left of the screen and goes to the top right of the screen and lasts all day, or a strong bear trend the opposite, top left to bottom right all day. But for day trading, I think about the smaller picture, and I think about what's happening on the lower time frames, and I think right here is a very strong bull trend. The context is good. We have this major reversal, this wedge bull flag, lots of overlap, and bears not clearly getting strong breakouts below bars. There's buyers below bars. And once we pull back to support, a couple of support levels, the bear channel line, this gap, the moving average, there's reasons to buy here, and the follow through is good. Good reversal bar, small tail above, shaved bull bar, small pullback, more trend resumption. So to me, this is the type of price action that Al's talking about when he says, buy the close, buy for any reason. Buy because it rained in the Amazon last year. Now, we still want to count pushes and momentum and the rhythm of the market, because we know after 3 pushes, 3 legs, the market often pauses or reverses. So that's what I have drawn here. We have a spike, and then I'm not sure if we pulled back here. It's hard to tell. It looks like we did. Brief pullback, but either way, a pause. So 1 push, pause or pullback, 2nd push, another pause, and then range expansion again, a 3rd push. Now we're getting the biggest bull bar in the entire rally after maybe 15 bars. And that's a clue or a hint that this might be an exhaustion gap. We're also breaking out above the high of the day. There's probably sellers at that price. And if you sell there and scale in, you're probably going to make money. So even though it's a big bull bar, it's one of those bars that traps traders into buying high, whether you're a bull or a bear. Maybe you're a bear and you start selling here and you're scaling in, and then you finally get this huge bar against you and you think, I can't take this loss anymore. I've got to just close the position. And you're selling all the way up only to buy back your shorts here at the top, only to watch the market come back down. And the same is true for the bulls. They don't see a very good buy signal all the way up, and they finally get this huge bull bar. And we've got 3 pushes, and they finally conclude, okay, the market's going higher. I'll just buy the close and go for a measured move up, only for the pullback. So I think that's a common trap, and one way to look out for it is to count pushes. 1, 2, 3. So a late leg and a big bar when we're already late into a rally. So probably an exhaustion gap, and sure enough, the gap closes. Big up, big down, but probably buyers at support down here, because again, we're thinking about trapped traders, and there are trapped traders below. Maybe not a great buy signal here, and not a good sell either. It's too tight to be looking to sell, but traders looking to buy, maybe they're chasing or they didn't get an opportunity to buy. They're trapped out of a winning trade, and we know the bears are losing all the way up. Very hard or virtually impossible for a human to make money selling on the way up. Much easier and better to look to buy through here. So trapped traders here looking to buy. We get the pullback to support, and then we get a channel which is really similar to this channel. It's tight but not very strong, and it's not very steep either. It's really gradual, but it is tight. We have a channel line above, trend line below. The lines are close together, but we have to think about leg count or counting pushes, and it's just like down here. This is basically a wedge double top, and this is an area where traders are looking to sell. Traders who got trapped up here, maybe you bought high, you scale in, you're looking to take profits near your original buy. And the bears, they're hoping this is a trend line break, retest, and in this case a higher high, major trend reversal. So I think there's a reasonable sell below this bear reversal bar or this breakout bar or here. But this is really disappointing. We come to support, reverse back up. The bears should get a second leg down, and they do, but look at the second leg. It subdivides into 2 legs, or maybe 3. I can't tell if that's a spike break, maybe 1 or 1, 2, or if it's a pullback, 1, 2, 3. Either way, 2 or 3 legs down here. It's nested, 1, 2, 3 pushes, another wedge double bottom, in this case, wedge double bottom, bull flag, bull trend, and 1, 2, 3, 1, 2, 3, pushes down to support. So wedge double bottom, reasonable buy above this bar, maybe buy the close this bar. And this looks like an exhaustion gap again for me. It's late in the day, it's not worth really taking this trade. I think I've got this from Ali. He said there's 81 bars in a day, and if you can't make money in the first 70 bars, then maybe just wait for the next day. So in other words, don't trade the last couple bars of the day. I learned from PTM there's kind of a hard stop at bar 75. If you're in a trade, just close the position on the close of bar 75. And it's not that price action stops working at that point in the day. As we can see, it was well behaved here, wedge double bottom, we got the bull breakout. It's just that at the end of the day, you have big institutions that really, they're trading position size that actually shift the market. And at the end of the day, you have risk managers going around, and the traders have to really start closing positions at the end of the day and move certain things around, and that can be a little bit unpredictable. So it makes sense to just be safe, play it safe, and don't be in the market for the last few minutes of the day. And then for day structure today, this was a bull trading range day. We did open sort of, I would say, in the upper third of the day's range. I think it's a little higher than midpoint, but down here, this is a trading range. We can see a lot of trading range price action. You could draw a box through here, and we have a trading range down here, a bull breakout, and then here, largely sideways, so another trading range. So we have a lower trading range over here, and an upper trading range over here. And in this type of day structure, where it becomes a lower trading range, upper trading range, the top of the first trading range is usually support, but it doesn't look like we quite got down there today. Although the high of bar 1 may have acted as support, tried to break above it and failed, tried again. It looks like we probably hovered around the open of the day here. The open of the day is probably the middle of that upper trading range. So because we had the lower range, the upper range, we closed above the open of the day. We closed near the high of the bar. That's why I call it a bull trading range day. And then as always, if anyone hasn't studied the Brooks trading course, I highly recommend studying price action through the Brooks trading course. This is just me demonstrating how I use the concepts, and it's part of my practice to review the Emini. But everything I've learned is from Al Brooks, so you can find the course in the link in the description of my videos. And that's it for today. So again, I hope everyone had a great day, and thanks everyone. I'll talk to everybody soon.